Exciting. All right, tell me what a penny stock is. This is like a company with kind of a small market cap. They can't get Goldman Sachs to do their IPO. They can't get the New York Stock Exchange to list them. So they have to go to these kind of smaller exchanges. And like, what is the deal with these things? And sometimes they're scams. And how does this work? And sometimes you're shorting the stock. And I'd love for people to understand what that is.
Yeah, so they're very small companies. That's basically what you have to do. You have to understand that they're kind of like long shots. Like if you ever go to the horse races, right? They're like 50 to 1 long shots. Like no one expects them really to win the race, but every now and then they do. They have 1 or 2 products. They might have some revenue, very little in the way of cash, but they're stocks because they're trying to raise money. The higher the stock price, then theoretically they can do a financing. Like Uber just raised billions of dollars. They did a massive IPO, which is an initial public offering. They had all these banks, everyone's clamoring for them because they're a gigantic company, even though they're still losing billions of dollars, but that's another story,
that's another story,
These small companies don't have revenues, they have no cash, they just have pipe dreams. They have hopes like, oh, we have this gold mine in Ecuador, or we found this great oil potential discovery down in Colombia. And many of them are scams, but many of them also have some potential, like they're diamonds in the rough. Like I like buying companies that announce big news. I'm in this company, you're gonna laugh.
Are you talking your book here? And maybe if you can tell what you mean by you talking your book.
Well, no, so I'll tell you this. So this is actually a funny story. Right now, as we're filming this, I have 0 positions. I like to get in and out. I trade like a sniper, but I'll tell you a story about spider silk. Have you heard of spider silk?
I haven't.
So picture like all these spiders spinning little silk, right? Yeah. The ticker is KBLB. I've already sold it. I actually underestimated it. I bought it at 8 cents. It was already up from 6 cents on the day. So it was up like 30% on the day. They announced a deal with Polartec. Polartec is this big multi-billion-dollar company for nice sportswear. They're kind of like what's a good company? They're kind of like Patagonia.
Yeah,
like Patagonia?
North Face or something like that.
Yeah, like North Face, right? Okay. So Polartec's CEO in the press release, this was just a few weeks ago, and they said this spider silk has the potential to be like the next big thing. And I'm like, are you kidding me? Like this spider silk has been around for years. The company has never made it. They've always been a pipe dream. Again, they have no cash, no revenues, but they have this potential spider silk. But then Polartec's CEO goes on public record saying this. So the stock is up, I buy it. I'm all excited. I'm like, this is amazing. I buy the stock. The next day it does nothing. I sell, I make $3,000 because I was right a little bit, but I was disappointed. I was like, I had to throw out my thesis because even though I was excited about the product, I was excited about the press release, the market didn't agree and it just didn't do much. 8 days later, the thing starts spiking. I don't know if some hedge fund wrote about it or someone saw it, whatever. And now the thing right now as we're talking is at 35 cents and I sold it at freaking like 8 or 9 cents a share. So it did triple, but not in the time frame that I wanted, right? Okay. And that's the inexact science behind this. So that's a good example. The good news also is that it's probably gonna crash eventually. They're probably gonna screw up in some way. I expect the worst out of all these companies.
What's the average market cap of these companies? And what does market cap mean for people that don't know?
Yeah, so this company is worth about $250 million, all on a pipe dream for their spider silk.
So if you take all the shares outstanding times the share price, you kind of get the market cap, which is roughly what the company's worth if someone's willing to buy it.
If someone's willing to buy it, but they never really are. Like you have to remember, most of these penny stocks go out of business. It's kind of like knowing the end of the movie and you can work your way back. Like you know pretty much that this company's gonna fail. Every now and then one company survives or thrives. Okay. It's so rare. So I just expect the worst out of all of them. Either management will screw it up, the product will screw up. Like I know it's a cynical way of looking at it, but I've seen tens of thousands of companies come and go. The good news is that they're volatile. They don't just all fold, they don't all just give up. They try to spike. When the stocks do spike, the companies do financings, they try to raise money.
There's news like that.
They have news like that
every
now and then.
So that you can trade. So a trader just wants a volatile stock.
Correct.
Right? That has some liquidity.
Yes.
That's what you need.
I mean, this thing trades 50, 100 million shares a day. So this is a very liquid example.